The German economy in decline, losing their companies in shutdowns and forever goodbyes from companies moving abroad. It will have its effect on the other European countries with lesser good economic stabilities, such as, all other EU member states. Due to high energy prices, respectively high gas and electricity prices, the German economy is wiped off the table of world importance. One company can be a patch on an open wound. ADX Energy, an Australian company with its main business in Upper Austria, can bring some relief in an area tortured with economic decline. ADX Energy is on its way to become a major player in providing Austria's and Germany's economy with the supply of energy their local economies request. The company has some very interesting projects in Austria, with already one producer on a small scale and one that can quickly be increased in production if needed. There is one project in particular that can become a real game changer, not only for the company, but for the local economy as well. We will come back to that project later on. Who is ADX Energy? In 2010, Audax Resources demerged its gold and base metal assets and changed its name to ADX Energy. The gold and base metal assets became under the management of Riedel Resources. The complete board was changed from mining specialist to oil and gas specialists. The company has projects in Italy and Romania, but the main focus is on their projects in Austria. When we look at the company's presentation of 22 January 2024, we notice that the company has a stable underlying and increasing cash flow. This statement is backed by a narrative without any numbers, so we have to look at the annual report to confirm or dismiss this statement. We have to keep in mind that this narrative is looking into the future, and therefore we need to look back at the development and production of the projects as well. Let's take a look at the cash flow this year. Looking at the total current assets of 2021, we can notice that for the year 2021, the company was not in its best shape. But when looking at the numbers of 2022, we see a big improvement, even though the total current assets are in decline. Based on this outcome, we can confirm already that the company's cash flow is increasing. The current ratio tells us many things. It tells us that the company can pay the bills, and it tells us the debt ratio as well. While the debt ratio in 2021 was 0.85, meaning the company was not in such a best financial shape, the numbers changed drastically in 2022 and the debt ratio became a satisfying 0.21. How did this come? It certainly did not come from their production in 2022, as the company produced 95,163 barrels of crude oil in 2021 and only 47,543 in 2022, we see a decline of 16,915 barrels of crude oil for 2022. As for gas sold in barrels of oil equivalent, we notice an increased production from 8,604 in 2021 to 12,309 in 2022. The average production rate in barrels of oil equivalent per day has fallen from 284 in 2021 to 238 in 2022. It does not look that much, but this decline of barrels of oil equivalent of 46 barrels a day represents a decline of $3,680 per day, given on a year approximately a loss of $1.3 million, based on a Brent oil price of $80 per barrel. It means that the increased cash flow came from issued shares. Is this bad? No, it is not, and it will become clear when we calculate future profits and investments. The decline in average production is reported under the marking 2. The company expects to increase their production and reserves from new discovery. The Vienna Basin Fields on itself stands for 1.72 million barrels of oil in proven and probable reserves. Beside the 1.72 million barrels of oil, the multi-layer field is suitable for hydrogen storage, and there is a direct connection to the Vienna refinery and gas pipeline. If we calculate the oil reserves of the Vienna Basin fields, based on the market price of $82 of 13 March 2024, the day of preparing this analysis, the total value of oil is $141,040,000 US pre-tax. If we assume that they would increase production up to 500 barrels a day, this would mean that the life of well will be close to 10 years of production. Note that in this analysis no further explanation is included, even though the company is exploring for upgrades. The company sees a future in building a 47 megawatt renewable energy potential in the Vienna basis fields, as ADX has 100% interest in it. They have 13.7 hectares of land at hand that is suitable for a large solar park, and it is only 65 kilometers away from Vienna. Besides that, we may not forget the multi-layer field suitable for hydrogen storage. As the solar park and the hydrogen storage is not at today's order, I do not calculate these opportunities in this analysis. The second project is the Ansoff project, in which the company has a 50% interest. Ansoff 3 had a long-term test production from October 2022 until September 2023. An average test production of 115 barrels of oil a day were extracted without the use of water and without any pressure decline of the well. The well was shut in after reaching the regulatory limit of 5,000 tons or 36,000 barrels of test production. The well shut in has enabled the drilling of Ansoff 2 and the installation of a permanent facility. The installation of a permanent production facility will allow higher production rates. With Ansoff as the next oil producer for the company, the future looks bright and the cash flow seems secured. With Ansoff, a low-risk follow-up oil prospect at 9.5 million barrels provide a rapid pathway to further reserves and cash flow. Remember earlier when I said that cash flow would become better. With an oil prospect of 9.5 million barrels and an increased reserve, the value of this deposit is at least 779 million US dollars. And at last, the Welgau project. As Welgau could host 807 billion cubic feet equivalent of gas, this would mean that the company and even Europe is hitting a jackpot. The value of such a deposit would be 10.5 billion US dollar. According to a Stockhead special report of 13 March 2024, the exploration well is speeding ahead of plans. That would mean that in the last week of March the results should be known. If the exploration well confirms what is assumed, the company's share price could soar rapidly, especially when full production could begin during the fourth quarter of this year. Calculating basing accountants and reserves that already been confirmed, the share price is severely undervalued and its price at the moment should be about 1.10 US dollar or 0.63 Australian dollar, or seen as €1, as they are also listed on the German exchange. The results of the exploration well will show The results of the exploration well will show more details, and as the assumption is right, the share price will become a multi-10-bagger over time. The share price might grow to 13.64 US dollar or 20.66 Australian dollar, or in euros 12.45. Note that the numbers given are based on present given information. The company has almost 502 million shares and a market cap of $50 million. Calculating a naked intrinsic value towards the share price gives a low number of 0.02, what makes me believe that the company has too many shares. In the future, the company should make amends to the shareholders and increase shareholder value. ADX Energy has several opportunities to do so. What lays most at hand is a share buyback. We might expect something when the company's production is at normal speed. Please note that none of the given information is investing advice and that these numbers are purely based on my personal insight and calculations. Always do your own due diligence before investing. The only thing I can advise you to do is to read the disclaimer properly.